All right, time for another big interview here on Power Lunch. Pleased to be joined by Allianz Chief Economic Advisor, Mohamed El-Erian. Mohamed, good to see you again. Listen, you have been,
see you, Brian.
Well, thank you. You have been fairly critical of the Fed. You've also been critical, but fair. And as the job market has been slowing for over a year, some, like the guy in the White House, are wondering why the Federal Reserve has not already begun to act on interest rates. Outside of those rather, some would say, bizarre cuts last fall, we asked my ex-audience, Twitter, what it thinks. I asked, by not cutting rates this year, the Fed is A, doing it right, or B, getting it wrong, Mohamed. 67% said the Fed is getting it wrong by not cutting rates sooner or more aggressively. Would you agree with that take?
I agree with the 2/3 who said that they have been getting it wrong. You know, there was a bunch of us outside and inside the Fed that were arguing for a July cut. And our concern, which is playing out in the data, is that Chair Powell had taken too narrow a view of the jobs market. And by that, he was ignoring the weakness that was starting to come to the surface. And the problem, as you know, Brian, is if you don't address weakness in the labor market, it becomes nonlinear. It accelerates and it becomes much more damaging. So, yes, I think they have gotten it wrong. I think, once again, they're late. They will cut in September. And I suspect there will also be a discussion, should they cut by 25 or 50? And where you end up on this depends on whether you think the labor market has a demand or supply problem and what you think the inflation dynamics really are.
Can they make, let's assume that you are correct, as you probably are. I would, by the way, agree with you. Can the Federal Reserve make up for a policy mistake of not cutting rates already by overcompensating on September 17th by cutting by 0.5%, not 0.25%? Would that sort of make up for any sins of the past?
We've seen this movie before. We saw it a year ago, where they refused to cut in July and they did a jumbo cut, 50 basis points in September. I think this time around, the risks to the economy are higher than they were a year ago because we've eroded, as you just discussed earlier, we've eroded the financial security of lower income households. So could they catch up? Yes, they could. Hopefully they will, but it's a more risky operation than a lot of people expect it to be.
Yeah, they made the cut last year, and then, of course, this year it's become overly politicized because the president's gotten involved, had the public spat. You know, now they're trying to remove a Fed governor. It's just gotten so muddled. But let me ask a different question, Mohamed. Do we over-rely on the Fed? It's like, I feel like now we always view Fed as like Superman. Like, well, when things get troubled, don't worry, the Federal Reserve is going to save us. I'm not sure with AI and everything else, the Fed matters to that level, but what say you?
You're absolutely right. It doesn't. You know, I've often argued, get off center stage and put the focus on other elements of government that can enable this economy to continue to grow. No, they've been center stage basically since 2008. In the beginning, they had good reason to be center stage because the government was less functional at the time. You know, we shut down the government. There was issues. But more recently, and I think Secretary Bessent writes about it in the Wall Street Journal today, it's because they've had massive mission creep. So they've staged center stage when they really should have been slowly going off and allowing not just the focus on the fiscal authorities, but more importantly, the focus on structural reforms. That is the key to sustaining growth and productivity.
What does that mean? What structural reform would you do?
I would focus on better diffusion, faster diffusion, more even diffusion of these incredible innovations that are going to significantly increase productivity and that are not understood enough, and that we risk not having the sort of diffusion that would be consistent with the productivity potential. I'm talking of AI, life sciences, robotics.